Good afternoon from London. This is Douglas Blakey, editor of Retail Banker International. Thank you very much for joining this webinar today, discussing how effective are online account opening processes, brought to you by Retail Banker International and HooYu, the leading identity verification service. I'm joined today by Dave Pope, Head of Marketing at HooYu. Dave, good afternoon to you. It's great to see you again.
Hello, Doug. How are you?
Very well, thanks.
Good.
This should be fun. I'm gonna keep my opening comments very brief so that we can get started as soon as possible. But in today's digital world, we're often forced to take trust for granted, with 1 in 3 people a victim of fraud by someone that they've met online. Now, with HooYu, you can quickly and easily build trust in the people you're dealing with by confirming their identity. Now, I'll let you explain the HooYu proposition, but very briefly, HooYu confirms a person's identity in real time. You send them an SMS or email request asking them to provide their identity information. HooYu confirms the details and sends you a confirmation report in minutes. And focusing on consumer finance today, as we all know, the digital banking revolution is still gathering pace, from fintech startups increasing their venture capital funding to the traditional incumbent banks helping the high street giants optimize their digital offerings. So, by what yardstick can we measure a bank's digital performance? Perhaps the simplest measure of a bank's digital mettle is to benchmark their online account opening performance. HooYu has commissioned research, and we're here today to discuss some of the findings of that research, discuss best practice and how HooYu can help banks to get their customers over the account opening finishing line. Only one housekeeping point: questions. Please engage with us. Questions are very welcome. Use the comment section on the website to submit your questions, and Dave will pick up as many of the questions as we can. Let's kick off. Dave, give us, just in case anyone out there doesn't know HooYu, give us a quick background about the company.
Sure thing. Thank you. So HooYu, we're a new approach to the age-old challenge of identity verification. The team and I behind HooYu, we've been in identity for many years. In fact, we sold our old identity company called 192 Business to Experian in 2012. And then last year we launched HooYu, and we wanted to make a very different identity company. And perhaps one of the main differences about HooYu is that what we're trying to do is to democratize identity technology and say, hey, look, it shouldn't just be the big banks and clever online companies that can check someone's identity. In fact, in today's digital age, sometimes one person wants to check the identity of another person. So let's say that, Doug, you're about to rent out your house in Edinburgh to this dubious person called David Pope. You might want to check his identity before you let him into your house.
I certainly would. Yeah.
Oh, thank you. And in any case, in today's digital world, sometimes one person wants to check the identity of another person. So we have a consumer service where people can come onto HooYu.com and check the identity of other people. And of course, we're serving businesses with our technology as well. So that can be money transfer companies, banks, peer-to-peer lenders, car sharing platforms, any kind of company that needs to check the identity of its customers. But the consumer side of the business is very, very interesting. In fact, the other week we actually did see the passport of the President of Barbados. On a daily basis, we see driving licenses of beautiful Russian supermodels. And in fact, in those situations, it wasn't really the President of Barbados, and it never really is Russian supermodels. It's our job to go back to our customers to say, hey, mate, whatever you're doing, don't send them the money. They're using a fake ID document. And so on HooYu.com for consumers, we are protecting people from scammers, from fraudsters. And sometimes it might be an investment fraud that the consumer is particularly worried about. Sometimes it might be romance scams or dating fraud. But it's very, very interesting seeing the kind of fake ID documents we get coming through. And then the second thing we're trying to do differently as HooYu is that our experience is that identity companies are kind of quite siloed. You have some companies that are good at doing database checks, the Experians of this world. You have some companies who are good at doing document checks. You have other companies that do biometrics. You have other companies that can check a customer's digital footprint. And you have other companies that offer PEPs and sanctions checking. Well, because we're a little bit old and long in the tooth and we've been around the block a little bit, we're old enough and ugly enough to be the first company to blend and combine all these different technologies and unite them into one platform. So HooYu is a mix of database checking, digital footprint analysis, ID document authentication, digital footprint analysis, and PEPs and sanctions checking. And we have our identity platform that sits over and governs all these technologies, and we provide a report using all these technologies back to our clients using our API in seconds. So,
well, as we said, we've got some very interesting research that has been undertaken ahead of the webinar today. Some of the key takeaways from that research, what jumped out at you from the survey that we've undertaken?
So with my marketing hat on, what jumps out at me actually is the level of unsuccessful account opening applications that never get across the line. So in the e-commerce world, it's called basket abandonment, and obviously we see the same thing in financial services as well. So the thing that leapt out at me was the number of account openings that don't get completed by the consumer.
And within the 5 banks that we were looking at in particular, some really quite major differences.
Yeah, there was
between the best and the worst.
Yeah, there was a wide variation in terms of how long it takes customers to open an account online with any given bank. There was wide variation in the volume of account openings, and there was wide variation in the growth of online account opening attempts compared to prior year as well. So to me, it seems there is still a digital divide.
And we're going to be looking at just how many account applications are opened each year at some of the banks. And again, some quite big variations in terms of the success rate.
Yeah, so we spoke to 5 big UK retail banks here in the UK. Between them, they serve approximately 40% of the market for personal banking. And of the banks we speak to, a common phrase seems to be that banks want to think digital, act digital, and be digital. And there's any number of ways to measure how well a bank has got. The banks have gone down their journey to digitalisation, whether that be how well people use the online banking facility. But I think one of the best metrics is really how many online account applications are they seeing per year from the online channels. How long does it take, and what's the success rate? And I think that's a good way for banks to benchmark themselves against the data that's in this report.
I'm going on to the next slide. As you say, digital divide.
Yeah, so this basically shows the number of applications in the last financial year from the 5 banks that we spoke to. So this is the number of attempted account applications. This does not equal the number of accounts that were actually opened. So on to our phrase of the digital divide. So it looks like there's a big divide, there's a big variation in the number of online account opening attempts that we're seeing across the banks, but I don't think that's fair to Banky, because obviously in the sector, some banks are just much bigger than others, and they're going to command a lot more clout and drive a lot more customers to their website. So that's kind of like par for the course. But what I do see here that does convince me that there's still a digital divide is we look at what comments the banks made in terms of these stats compared to prior year. So Bank A, they more than doubled their number of online account opening attempts compared to prior year. Bank B, they had 23% growth, but that 23% growth is much more impressive given that these are one of the big 4. Bank C, they stood still, had a very, very small contraction in the number of online account opening attempts, and Bank D grew very modestly by 13%. So here, to me, there is a digital divide, because you see some banks quickly hoovering up more online account opening attempts than others. And so, yes, I still think it's the case that not all banks are created equally when it comes to digital.
And as we'll see, there's a big variation between quickest and slowest in terms of how long it can take to open an account.
Yeah, absolutely. Just on the number of account applications per year, Bank A, they said that a lot of their growth was driven by introducing digital technologies, but they say here that they introduced digital technologies into a self-service approach in branch, and that accounted for 70% of their new-to-bank account openings. And this is an example of a bank thinking digital, not just for its app or its website, but also for its in-branch approach as well. The banks we interviewed, they said that, and this surprised me actually, that desktop and stroke laptop was the most popular channel for applications. I would have thought that it would have been something like 60% on mobile and 40% on desktop or laptop. So that did surprise me. But also what surprised me is that none of the banks had any ready stats to hand to be able to segment the applications by platform, whether that be by mobile, desktop, or by operating system. So I think the banks might need to go back and look at and get a bit more granular with that analysis and see what data they can derive from it.
And moving on to the length of time it can take to open an account, again, a bit of a variation.
Yes, I mean, the good news is that this stat is going in the right direction in terms of how long it takes. Based on some prior research, the average is now down by about 3 minutes, and the average is now at 14 minutes and 24 seconds. But yeah, you're right, we're seeing a wide range of times. In Banky at 25 minutes, they're a real outlier. It seems to me that 10 minutes seems to be the industry target. We see 3, Bank A, B and C, all pretty much being there or thereabouts for 10 minutes. I think that's a psychological goal that the banks are aiming for. When interviewed about why and how they were getting that time down, the banks were really talking about a shorter account opening journey. And one of the things that we've seen at HooYu when we're talking to the banks is that now there's a lot more obsession. I think obsession is the right word. There's almost an obsession with the customer journey, the customer digital journey, and I think that account opening process is actually now it's much more better curated than it ever has been. It's not just the innovation or the digital people that we talk to who seem to have responsibility for that. Even now the financial crime guys, everybody we speak to, they all seem to be stakeholders and guardians in this journey. So I think it's much better curated. I think there's also other companies and other technologies out there that are really that are good partners for the banks in terms of helping them manage their customer journey. So the likes of, i.e. intelligent environments, and the work they do to help consult with and manage online account opening processes with their platforms. But equally inside the banks now, I think everyone is much more of a digital native. The application processes now seems to be much more full of drop downs rather than free text. Less is more. The less application fields that there are, the better. And that means less pages for the poor old customer to wade through, but also crucially for account opening on a mobile device, the less pages there are means less communication going off between the mobile device and the bank. And then if you're on a train, you're opening an account, you lose your mobile signal, then that's it. That's that account application lost. So I think there's the account opening journey is shorter for a number of reasons. Just to talk about Bank A, they said they reduced the account opening time in terms of in branch from 45 minutes down to 10 minutes, and that's basically 45 minutes speaking to a person who's based in the bank, somebody behind the desk, compared to 10 minutes when they have it there on the tablet in the branch, and people can nip in and nip out and do it very, very quickly in the lunch hour. So that for me is a really good example of taking digital, stepping back and thinking what digital actually really means for the bank, as opposed to saying that digital is all about online. It's not. It's about the digital experience, whichever channel the customer is coming through.
And the key metric here, still less than 2/3 of account opening digitally gets across the finishing line. So while a number of positive metrics from previous research you've undertaken there's still a hell of a lot to play for.
Yeah, so I think, again, in terms of the number of account opening attempts, the speed of account opening, those stats are going in the right direction, as is this as well. So this seems to be a couple of percentage points better than where it was a couple of years ago. But even so, what we're seeing is that only 61% of online applications ever get finished. Only 61% of them ever get across the finishing line. And so that's 39% of them that are being abandoned. So whilst all the banks are saying that, yes, they're getting lower abandonment rates than the prior year, it's still what I see as a fairly leaky bucket. Again, with my marketing hat on, if I look at the number of potential customers I would be driving to my page, to my site, X% of which then drop out, it really kind of really inflates my cost per acquisition. So in other words, as a marketeer, I look at these stats and say, oh, if I only manage to convert more of these and get a better online account opening journey, then I'd be getting a lower cost per acquisition. So just on the subject of the online applications, if we talk about benchmarking, it looks like the winner of today's benchmarking race is actually Bank C. So Bank C have got the lowest abandonment rates. If we look, go back to this, so we can see here that 70% of Bank C's online account opening applications are being completed, which gives them 30% the lowest abandonment rate. So here's some commentary from the banks around their views on it. So Bank B, they were really talking about continuous digital improvements, and they were the bank that really had this holistic view of what digital means, so that they could serve their customers in their channel of choice. Bank B and E, on the other hand, they seem to think that all the banks were already pretty good at digital. I would take a counterpoint to that to say, well, if you look at the variation in the success for online account opening, the variation in growth, the variation in volumes, variation in how long it takes, and then I think there's a spectrum of how good the banks are at digital. I don't think they're all pretty good at digital. And Banky, they were very, very proud of where they were, and they were saying that they feel like they've really bridged the digital divide and got where they want to be. So back to Bank C and how we think they kind of won the benchmarking race for today. The reason they said that they were able to reduce their abandonment rates is because they were saying that close to no customers from the online channels needed to go into a branch to complete the process. And in fact, KYC is often cited as the blocker where customers drop out. So on that note, I'd now like to share some thoughts on how HooYu helps to offer a great online account opening journey by reinvigorating that KYC process. So, sorry, after you, Doug.
No, it's a fresh approach to identity. That really is that's the target that you're meeting.
Yeah, in essence, what we're trying to do is to verify the customers that can't be verified using a bank's existing processes. So what we're not here to do is to replace the Experians, the Equifaxes, the core credits of this world. What HooYu was designed specifically to do is to verify those customers that can't be verified by the existing traditional database approach. And so what we hear from our clients is that anywhere between 70 and 85% of their existing clients can be verified using the traditional database approach. That means that HooYu or something like HooYu is needed to be able to instantly verify that 30% of customers that can't be verified with the traditional approach.
With 50 million adults in the UK part of the banking system, that's still a large number of customers.
Yeah, so if it's 30%, then that's 15 million people who aren't being matched to the existing database, the incumbent database approach. And what a lot of the banks still do and have done historically is say, oh, sorry, if you can't, we haven't been able to verify you against the existing databases. Can you please come into the branch to give us a copy of your ID document and your proof of address document? And what HooYu is here to do is to automate that process in the account opening journey, so that that process happens straight away without the customer having to trudge into the bank to hand over a copy of their ID documents. In fact, some of the banks we're working with, they do enable an upload of a document as well. But quite commonly, that comes as a second stage, a second wash, a second process. So if you can't be verified against the bank, against the databases from the credit reference agencies, then the application stops, and the bank shows a screen saying, "Oh, thank you very much. We'll be in touch to confirm your account opening." They then at some point get an email to ask them to provide an ID document. But that's a real body blow. That's a real body check to the momentum of the account opening process, and that in itself creates abandonment. And HooYu actually integrates into the account opening process for when there has been no match to those database checks.
And you're using tools such as?
So we like to call it universal attributes of identity. So in other words, everybody has a face, everybody has some form of ID documentation, and these days everybody has a digital footprint based on how we'll buy and chat and shop and like and bank our way around the internet. So what HooYu does is it creates a service that then pops up inside the account opening process to say, "Hey Doug, can you please take a selfie? Hey Doug, can you please say what is your name on Facebook, or your name on LinkedIn, or your name on PayPal? And can you please take a photo of your ID document and take a photo of the utility bill?" In essence, what HooYu then does is to say, right, have we got a real ID document, or is it a fake one? Is it showing signs of forgery? And then what we do is we do a facial biometric comparison between the face and the selfie, the face and the ID document, and say, right, are we looking at the same person? And that's important because I could steal your ID documents and try and create a financial instrument in your name, but in the same way that a burglar doesn't want to leave their fingerprints at the scene of a crime, a fraudster isn't going to want to take a selfie of themselves as well. So it's what we call detect and deflect. So we're looking at the digital footprint, and one of the things we do with the digital footprint is we say, right, now how good a source of data is this? How much do we trust it? And we measure something like 300 different parameters for each of the digital footprints we look at. And in essence, with the end user's permission, they say, yes, HooYu can access my profile for the purposes of proving my identity. And we'll look at, okay, how old is that account? How many people are they connected to? How much content is going through it? And one of the crucial things we do is we then look at how many other profiles are interacting with this content to like or reply or comment on that content. And that makes it exponentially very, very difficult to create a fake digital footprint. In fact, you can get hold of a fake ID, fake driving license in the UK here off one of the novelty driving license shops for like £15. So HooYu, we think it's actually a lot harder to create a fake digital footprint than it is to get hold of a fake ID document.
So there's a greater breadth of the data, depth of the data.
Yeah.
It's current.
Yeah.
It's harder to forge.
Yeah, exactly. I mean, one of the things I always think about the verification databases we all know and love here in the UK, the electoral roll. It's a good database, but it's always at least a month, or sometimes 3 months or 6 months, depending on how frequently the council updates it. It can always be a month or 3 or 6 months out of date. Whereas the data from your digital footprint, well, everyone's populating that every day, and so we can drive many more calculations based on the frequency and the recency of the data we're seeing through these digital footprints. And there's a lot of depth of data as well, that based on how often people connect to Facebook, to LinkedIn. It's a great verification source to supplement. I'm not saying it should replace the existing databases, but it's a great supplement to the kind of verification databases we see already, to be able to fold this in on top of the existing approach. So here, this is some of the kind of document authentication processes that we go through. This sort of technology, of course, is already well established in the market, but the kind of things that we're doing is we're looking for evidence of forgery. Sometimes when we see that a document has been tampered with, we'll see the same pixels in more than one place on the document, and that's a surefire sign of forgery. One of the most common ways we spot fake ID documents is that fraudsters are lazy and they'll change the data on the face page of the document, but they don't know to change it in machine readable zone at the bottom. So say, for example, your surname is Pope, you're male, you're British, you're born in 1980, then that means the 17th character has to be Y, the 14th character has to be 0, and so on and so forth. Some clever maths hidden there, which most fraudsters seem to fall foul of. And of course, here's the facial biometrics piece, where we're using technology we run 3 or 4 different algorithms over the 2 images. The image is extracted from the ID document, and the image that's extracted from the selfie as well. So it's a very in-depth verification process. It's a very quick verification process. We have 2 methods of verification for the ID document. We have an automated method, which takes anywhere between 5 and 15 seconds, and that works for the majority of ID documents. Where we can't do an automated check, then we'll actually pass it to a manual document expert for them to review the documents and review a wider range of the security features, the hologram, the kineogram, the font, the layout, and so on and so forth.
So you're bringing together the digital footprint as well as biometrics.
Yeah, so it's kind of, it's a bit of a 2 + 2 = 6 situation, in that if we were to just be verifying an ID document in isolation, then that's one thing. But in essence, we're trying to, fraud prevention and identifying the money launderers, it's all around a series of challenges, a series of hurdles. And so, yes, I could try and apply to create a financial instrument in your name if I had your identity document or a copy of your identity document. But by looking across their digital footprint, we're starting to say, oh, okay, so have we got the same name on these sources? Have we got the same date of birth? Have we got the same gender? Have we got the same nationality? Are we seeing the email address that was given in the application and the phone number? Are we seeing that reflected back from this person's Facebook profile or their LinkedIn profile? So it's a way of using multiple sources to drive higher confidence in identity verification. Some of the big banks I've worked with in the past, they like the idea of document verification when there's no match against the databases, but it doesn't give them enough confidence. And the whole thing about identity verification, the whole thing about complying with the JMLSG guidance note, it's all around using multiple sources to confirm identity. And that's exactly what HooYu does. It just uses multiple sources, such as the digital footprint, the Facebook, the LinkedIn, the PayPal, the ID documents, and we also bring in a proof of address document as well, and we say, hey, can we see the same address on the proof of address document as we can see on the ID document and as we can see on the application? So it's really, it's a much more 3D way to look at identity as opposed to just using one particular ID document in isolation. And it produces this report, which is immediately passed back to the bank using our technology. And yes, the fraud team that can look at these reports in the HooYu interface, but the data is also passed back using our API in a really nice, easy way for the bank to work with. And once the customer's been in and gone through the HooYu process and they've been successful, it then redirects to the next stage in the application. So it's all seamless, it's all straight through KYC.
And bluntly, this complete picture of an individual is obtained in how many minutes?
Well, it's seconds rather than minutes. So we check the PEPs and sanctions databases, and that happens in less than a second. We check the electoral roll, we check the company's house data, that all takes less than a second. The acquiring the documents in the process and verifying it can take between 5 and 15 seconds. So it's the customer could be in and out and do the KYC very, very quickly. Without really causing a break in the customer journey. So of course we have lots of different ways to use HooYu. It works seamlessly as an iPhone, no matter what kind of device the individual is using. Are they on some kind of smartphone? Are they on a tablet? Are they on the desktop? And if the user starts on the desktop, we have a neat little process to enable them to then continue the verification process on the mobile device. and then what's happening on the mobile device is reflected back what's happening on the desktop. So there's some really good UI and scalable, responsive design behind the HooYu process. And of course, you might expect there's a merchant dashboard that our clients use to keep coming in and checking on the results of their verifications. And if they have one they're still suspicious about, then the fraud team can have a look at that, get the document on their screen, get the proof of address document on their screen as well, get the seller fee on the screen, and speak to the customer and make a more informed judgment about whether or not to onboard that particular customer.
Excellent.
Pleasure.
Well, I said at the start, questions very welcome. The very first question to come in is from William in Toronto at RBC. Dave, he's asking, what impact do you think the ongoing data breaches have on today's KYC environment?
Sure. So it's basically more data breaches that occur, the greater the availability of data out there for fraudsters and hackers to work with. And so what that means really is that the more that the data is available, the easier it is for fraudsters to go about their business. And so what that translates to is that some of the clients we're working with, they want to do the database approach, and they want to get hold of an ID document as well, and they want a proof of address document. So really, fraud, one thing is for sure, you always have to stay one step ahead of the fraudsters, and so this is a service that really helps layer on top of the existing approach, not just when there's no matches to the identity databases, but for when the merchant, the regulated company, wants to be really, really sure about that customer's identity.
And a question from Patrick at Bank of Ireland in Dublin. Dave, we've seen online document verification become an accepted part of KYC. How does your digital footprint check service sit with the compliance and risk staff at the banks?
So what we see there really is that, sorry, could you just repeat the question for me? Sorry.
We've seen online document verification become an accepted part of KYC. How does your digital footprint service sit with compliance and risk staff at the banks?
Yeah, sure. So, so online document verification is now a much more accepted part of the of a merchant's, a regulated merchant's KYC process. But again, based on my experience, you have some banks who have more security teams and fraud teams that say, look, this is good, but it still doesn't mean that this really is the person behind the account application. And so that's where the digital footprint comes in as a way to gain extra confidence that it really is that person. So it's all around using multiple sources. And if we look at how the existing database approach has come about, the reason that works and the reason that people are competent in it is because it's checking multiple sources, multiple databases that are curated and managed by the credit reference agencies. And it's the same with HooYu for that remaining 30% that can't be verified. It's not just the ID document, it's also the proof of address document, and it's also the digital footprint, which in itself gives lots more data points that can be used as part of the verification process.
And a question from Jakob at mBank, that must be in Poland. Dave, what are you seeing from the banks that you're already working with?
So what we're seeing is that there's still a lot of companies that a lot of banks, a lot of financial services companies that have a manual approach to identity verification, and that can mean one of two things. Number one, they're asking the customer to bring it into the branch, or number two, they might have a team in-house who look at the ID documents. One of the things that we're improving there and solving there is that takes time, that approach takes time for bank staff to get hold of the copy of the identity document, which makes the account opening journey longer for the customer, but it's also quite hard to create and maintain that level of expertise in-house to be able to distinguish what is a valid, legitimate, authentic Polish ID card versus is this a good Mexican driving license or is this a good Australian passport? So yeah, we see that really with the banks, they want to replace that manual approach, which lengthens the customer journey time, and also makes for a higher overhead in terms of verifying the ID documents. Where some of the banks are using the document verification technology, there's still a better way to do it to make for a seamless, straight-through customer journey instead of doing it as a secondary offline process.
And what ideas are being validated, and for which countries?
So HooYu is a global service that verifies ID documents from, I think it's something like 212 countries. So passport, ID card, driving license for each of those countries. So it's a global service, as indeed the digital footprint data that we analyse and compare to the data that we extract from the ID document. Fortunately, identity documents all subscribe to some kind of international standard that's laid down by the International Civil Aviation Organization. But you do have some documents that don't subscribe to that format perfectly. And so most of the time we can use our automated technology that takes 5 to 15 seconds to verify the ID document. But French driving licenses, for example, are a slightly awkward one. UAE ID cards. So there are some documents that don't lend themselves well to the automated verification process, and that's where our human document experts come into play. They're trained to border level standard, and they get the document on their screen, and they're the ones that look at it and analyse all the extra different security features.
And a question from Billy at RBS. Surely the Holy Grail is one verification provider that can do the data checks, but also cater for the hard to verify customers. Yeah, I mean, absolutely. For a start, that would mean just one provider to integrate with, as opposed to having to integrate lots of different technology providers. But I think the real benefit comes then not just in having one vendor, but also having a vendor that puts an identity scoring engine on top of all the different data sources, on top of all the different sources that are being used to verify identity. So what HooYu then does is to say, right, so here's how we've scored this person based on their ID document, here's how we scored them based on the digital footprint, what other evidence can we find from the databases. And so with HooYu, yes, you can have a sequential approach where you verify the customer first of all against the databases that you have, and then if you don't get a match or you only get a partial match against those databases, you can then go on to do the HooYu verification of the ID document, proof of address, and you can also use it on a risk-based approach as well. So you can really get quite granular about how you create that KYC process. So let's suppose there's only a partial match against the credit reference agency databases. In that instance, the regulated merchant might say, actually, you know what, we only need to get one ID document here to supplement what we've seen off the back of the database verification. And a question from David: are the sanction and PEP lists provided by HooYu?
So everything we do at HooYu is our own technology, our own IP in terms of the document verification and the digital footprint analysis. But where we bring in the electoral roll, where we bring in credit reference database, identity checks, and of course where we bring in sanctions and PEP data as well, no, that's not HooYu's data. We've been mad to try and reinvent all that, and so our sanctions and PEPs list data, that's actually provided by C6, who are one of the leaders in the field. They bring not just the PEPs and sanctions data, but lots of adverse media reports as well, which some of our clients find very useful in doing their enhanced due diligence. Let's see. Oh, sorry, there's another question as well.
What demographics are you targeting, and what about senior citizens who may well have very little or no digital footprint? Good question.
Yeah, sure. So that's a good question. So not everybody has a Facebook account, or actually more accurately, most people do, but not everybody has a digital footprint source such as Facebook that is strong enough to use to believe in it as a valid identity source. And secondly, not everybody might want to hand over that data. Anyway, some people are more sensitive and guarded around that data than others. So in that instance, HooYu is like a maze. There's lots of different ways through the maze to get to your verification end goal. So some people might be able to verify to prove their identity by virtue of providing one ID document and one strong digital footprint source. Alternatively, somebody, perhaps a senior citizen, might not have a good enough digital footprint source, so they might need to come through and provide one ID document, one proof of address document. So there's lots of different ways to achieve the same end goal of having confidence in that particular customer.
We said before that around 39% of accounts were failing to open. There's an abandonment rate of about 39%. Are you optimistic? A lot of scope for that figure to improve, even in the short to medium term?
Yeah, I think it varies. It really varies by the merchants and the demographic of the customer that they're targeting. It really varies as well by there's even percentage variances in terms of the coverage rate between the different credit reference agencies. So yes, I am confident that over the course of time, the coverage of the data will increase, but there's always going to be that 20, 25, maybe even 30% of customers that are what our clients call the unhappy path, where there's been no match to the verification databases. So you've always got to have plan B, you've always got to have a way to be able to verify those hard to verify customers. Sure, you could send them an email saying, oh, can you upload a passport? Sure, you could send them in branch, but that way is paved with opportunity for abandonment.
And there's a follow-up question regarding the sanction lists and PEP data. Are they part of the system, or do they have to be bought separately from the third-party provider?
So that's an integral part of the response from HooYu. Excuse me, from HooYu. When the verification process is initiated, the merchant always says to us, "Hey, HooYu, here's the parameters of this verification." That's obviously taken care of in the when they send us the request in the code. That's all done automatically, and it says, "Please go and get one ID document, one proof of address document, and check PEPs and sanctions." So it's part of the integral check that we do, and it's all passed back as part of the report back to the merchant.
Well, thanks very much, Dave. 45 minutes has absolutely flown by. I want to thank all of you for the questions that you've submitted. We've tried to get to as many of them as we can. It only remains to thank Dave for joining with us today and for the research that went into the webinar today. Exciting time, exciting area to be in, and HooYu a company to watch.
Thank you, Doug. Great to catch up with you.
Thank you.